Welcome to TradingLounge and the US stocks for the 29th of September. As you may know, I've been through the watch list that I created, which was 130 odd stocks, kept most of them, a couple that have gone. I'll put the new list on TradingLounge website, and now I need to find a quicker way to get through all of those 130 stocks. Now, there's a couple of things I need to mention here, is that we'll be doing trades shortly, and those trades will be on TradingLounge website under the trades page in that app, and I'll let you know when that occurs, and that will have the entry, the stop, the targets, the trailing stops, partial profits, and so on. The trades that I put on here, you'll have to manage them yourself. I will make a bit of an effort to put the stop in the right place, but you'll be responsible for that, because I may not be able to get to it in time. I'll try to do the stops quicker now, which I should be able to because I've got a lot of them labeled, so that makes life a little bit easier. Now, two things here, yes, a few things really. There's the trades, which I'll talk about that on the 4-hour chart. Now, the portfolio trades, they won't start until a while later, because if this count is correct, we've got wave 4 here, then we've got 1 and 2 here, and all the way up for 3 and 4 here, and then going up for wave 5. This move does appear to be corrective. It's the same one we're tracking on the NASDAQ and the S&P 500. Now, wave 4 may be in here. We know this is corrective, and wave 4 is probably in here, but also too, we know wave 4s can get rather complicated, so we may end up just having this as the A wave here, the B wave here just above 120, and then the C wave down through here, so we can't forget about that. We'll look at that on the 4-hour chart. The bigger picture here, where we've got our 5 waves to the upside here as wave 1, then we'll be looking for an ABC back here for wave 2. It's also possible as well that we need to keep in mind, and this is for all stocks, is that this wave 4 here with 5 waves going up here, it may be possible that that's the actual top of the whole market there, which mean would be in for a much deeper correction at that point, back below here. So we need to keep that in mind as well, which we will do as this is moving down through here, of course. Normally the A wave moves quickly, and the C wave is on a bit more of an angle. A bit like over here, the A wave is quick and sharp and a bit freaky, and then wave C kind of edges itself lower here. We'll see if that's the personality over here for this. Yeah, so that's it. 2 takeaways here. We could have wave 1 here with an ABC for wave 2 and then heading up, or we can have wave 5 here as a top and then moving much deeper down here. So we need to bear that in mind. Within wave 4 here, we may have wave 4 in here, or it may need to be placed over here. The bias is over here, but we need to be mindful at the 120 area, so we'll have a look at this. So this is pretty much the same pattern we've got for the S&P and the NASDAQ in their own way. And there's a lot of stocks that fall into this group. There's other stocks doing different things, of course. So if we've long here, you'll have, where I put the green line and the red thing here, you'll have to manage the situation. I'll tell you the picture of how I see it up here, but that may not always be the case. Anything can happen. So if this market is going to fail, it's going to fail in this 120 to 125 area here, in this space here. And then come back down. Secondly, not to make decisions too quickly while you're in there, because you would expect the market to react and have a correction at this space here anyway. So I think you either take all the profit at the 120, or you take a percentage and then you look for the classic trading levels pattern sitting on here again. So the classic trading levels pattern, as you know, is quite simple: the arrival, the reaction, the first high above the level, and then some type of correction here. So we use that level there. We can drop it down to this one, or we may even get a better position in here, or we may want to take on some risk because we know something and we can actually get in some smaller positions here and then continue to build all the way through here. If we get support on this number here, then it's telling me that we're not going to be stopping here and turning after that. We'll be heading higher. And if we're heading higher, then we'll head up to the 150. What you experience here, you'll experience in a bigger pattern sitting on the 130. Something to think about. Let's move on to the next stock. Adobe. So same pattern basically. And I'm bringing most of the stocks into this particular pattern here as well. So just so they won't all be like that, but most of them will be in this NASDAQ style of pattern here. So once again, we're looking for wave 4 here, and then wave 5 up through here. I wouldn't expect wave 5 to go too far actually, because the extension is in wave 3, so wave 1 and wave 5 will be roughly the same. They won't be the wave 4. Wave 5 will be bigger than wave 1 because of the ratio that we've moved through in time and space, in terms of the 618 growing ratio of everything. But still, I think we can move up to the 550 area through here. To get that target there, you can take 61.8% of the third wave, or you could take retrace back to here and take 1.16 of the extension to the upside. But whatever you do, it doesn't matter that much, but it's more important to count the actual structure as it moves to the upside. I don't particularly like buying before a level here, but if our count is right and right with the other markets, then we should push up above that. So it's okay to get a position here and put a stop under here for Adobe, but the risk is there. You would add more positions on the top side here. Let's take a closer look at the 4-hour chart. So what you can do here is this is just so we've marked it and we can use it for a reference point talking about later or before or whatever. So we'd want to keep the stop out of the way here. And the main point here would be to definitely add on top of 50 here. Once again, the 50-60% retracement level will come in. I won't draw it in because it's at the 500 here anyway, but long as you sort of know that there's like a double whammy there in that instance, so it might take a little while to get up there as support. Once that 500 becomes the tested support, then you can move your stop up. Or you probably could also use the 80 here as well. It's a little bit early yet, but if there's more consolidation here, what I mean by that, well, the market would move up, then come back and check it again, and then start to move up here. And even though it hasn't found support up here, then you can bring the stop up a little bit closer in that regard. So you can half your position's risk, because if you're risking 1%, if you've got an account under 30,000 or under 30,000, then 1% risk is where you want to be. If you're closer to 100,000, well, then you'll be at closer to 0.5% and so on. So, but if you've got a very small account, well, then $200 for the risk, and try and the first step is to halve that, and you'll be quite surprised. It sort of only dawned on me when I really focused on it, is that you have your 1% risk, and if the next thing on your mind, really the only thing on your mind, is when can I move that stop up, or how far can I move it up? And then once you're focused on that, you really start to focus in on the levels, the price points, and what is support and what is resistance, and how close you can get to that. And then that way you're shaving off your risk all the time. You've got to get that trade to sort of, to 0.5% or to break even, because out of the 10 trades you do, 2 of them will probably run quite well, the 80-20 principle. Okay, let's move on. Okay, Adaptive Biotechnologies is in kind of a different pattern in a way. It seems to, we've already got our 4th wave in play here. I mean, this can also be counted differently as well. We've looked so this is out of sync with the other markets. Okay, that's important to note. It doesn't belong in that group, so we need to treat it differently. So we have, this was one of our older stocks, so we can look at this as a trade that played out. So from 3 to 4 here, we had an entry here. Now, probably only older TradingLounge members that would have done something like this, but even if you haven't done it, I think it's important for me to run through it, even though it's sort of hindsight, because I'll keep saying it, and it's because it's part of our setup. So we had this top here as a setup to go long at, but the idea is to bring it down to the next one when that comes into play, and you only know that when it drops below that. So then that one becomes into play. Market comes down and sits back up on the level, and then you take the next top over this side. I'm saying it as a lesson because it's what we use, what we do at levels and in any time degree as well. So if you've done that right, well then you've had an entry here for this, and of course we trade up to the next levels. So we know that up here we've got, well, here we've got 1, 2, 3, 5 and 8, and we can see the market bouncing around 5 and 8 here, but the takeaway here is that 5 is definitely the support, and the market is working with the number 8 here, 48 in this case. So it should push up higher, and it'll probably push up, even up into the 53 sort of area up here somewhere, if it's going to be in line with the other markets, because we could look at this as wave 1 here, back for wave 2, 3, 4 and 5 moving up here. So it could go higher, but we're going to take our money at the level anyway. And that's that. So let's move on to the next stock. So Autodesk here, and this is in line with the NASDAQ. So we've got wave 1 and 2 here, and all the way up here for wave 3 and wave 4 here. And we're looking for 5 waves to the upside to make wave 5 here in this instance. So the same thing applies as well with Apple as well. It's possible that wave 4 here can just move up into this halfway up here and then move down into another position, another leg here before moving to the upside. So take that on board with all the stocks and things that we talked about until we've sorted that out, that issue out. The target to the upside, as I mentioned before, we can look at it in 2 ways. We can look at it by just doing this roughly here. I don't know if this is in the book, but it's just something that I can do it from this end here up to 38. That would be 61 on the flip side. Move that to the upside here. The other way we can do that is, which I kind of prefer in a way, is working with the last structure, because it's kind of fresh and it's still connected. The relationship's still there, and that still comes in at 161 area there. So what I was sort of thinking here is maybe it will push up to the 380, the 300 here, which is a major level, but we'll just work with it. The levels to the upside, well, group 2 here would be 65, 72 and 80 here. So those numbers need to be viewed there. Let's just go to the 4-hour chart. So the move up here is a little bit like, well, it is the same as the current markets we're looking at in a way. So we're looking at them in terms of 1 and 2. When I say current markets, S&P 500, NASDAQ, as 1 and 2 here, and then going up for 3. Then we're looking for 4 and then up for 5. And then we'll have an ABC pattern here. In a way, yeah, so you really want to be going long on the B wave here. The stop needs to be kept out of the way. The risk in here will be $200, including brokerage if you can. If you've got a small account, that is. And that's that. So if we get 5 waves here, then we can look at moving up higher at this point. But like I said, the 50-60% retracement level here is where we could fail at this space here. So we may just get an A wave, a B wave and a C wave to this point and then collapse from that point. So we'll need to understand what this is moving up through here as well. If it's a C wave, it will probably be lazy, a bit more of an angle than wave 1 here, or wave A rather. So we'll see the speed of that, because if it's a wave 3, it should be strong like this here. You can see the A wave here is sharp, and then it's sort of reluctantly wanting to go down now, you know, chop, chop, chop. Okay, let's move on. Align Technologies, 3D digital scanners. This is quite a tightly knitted trend. The retracements and so on are all kind of in a small band here, so that's quite a good thing, you know, understanding the personality of each market. All the markets are the same, like human beings, we're all the same, but at the same time we're all uniquely different as well. So and we're all pushed around by social situations creating us. So markets are just the same. They're really just thoughts of the groups of people that are in that space. So I'm just assuming this is wave 4 here, and we're looking for 5 waves to the upside here for the top. Let's just check on the 4-hour chart, see if we can do anything with that. So the markets, as we know, are pushing up in 5 waves, 1, 2, 3, 4, 5. If that is the case, then we'll see an ABC pattern, and then if you can work out wave B, that's fine. If you can't, then you'll have to take out the top here, and that will take you into wave 3 to the upside. So you should be able to go from roughly 330 to 350 there, and it should move higher from that point as well, but as 1, 2, 3, 4, 5, so we could just move that up a little bit, but we'll be back to visit that before all that occurs at that point. Okay, let's move on. And the last stock here, Altair Engineering, is actually a multinational information technology company. It's a little bit tricky to read the intraday price action in this space here, I have to say. So what I thought I would do was revert back to the levels. That's what I do when I don't see a clear count. So I can see that the market needs to push higher. And one of the other things that you'll be able to see here too is that the resistance that was here has now become the support here. So that's a really nice foundation. So we just really need to try and find a nice way to move in. So I thought we could use the from 40 as a medium level, then this is a major level here. So the minor levels run between 40 and 50, 1, 2, 3, 5, and 8. So the 3 would be 43, and that will also be the top of group 1. So I know that if that becomes the tested support, then the market has left the number 40 at that point. You can move into 1, 2, and 3. The risk is just a little bit higher, that's all. So this is the 43 here, so we'd have 41, 42, and 43 that make up group 1. If that becomes the tested support, then that's fine. So if we get a little 5-wave structure up here, that will be the first high above the level, so you need to wait for that. So I'll just put that into that point there, so you need to wait for that to come back into that point, and then you can go along from that point. Keep the stop under the 40, but once that becomes the retest, once it becomes the support here, then you can bring your stop up under that level there, and you can't move it up until the next level, which is the 45 here, until that makes support. So that has to become the tested support. We're going to get a pattern across this as well. So once you understand that, it becomes a little bit easier. Thanks for tuning in. Cheers.